Everyone, just to let you know, I'm triple broadcast. I'm waiting for the options room to open up. I'm putting the chat in here, and now we're worn out from going crazy trading today. But let me put it in here. Good afternoon or good morning, Chart Patterns Mastery. We've kicked butt today. Really excited. Can't say that on the option side because then they'll say, well, why didn't you show me? And I can't put it everywhere, and I'm triple broadcast. So I'm on the YouTube stream. I don't know which YouTube stream, and I'm in the Chart Patterns Mastery as a courtesy, and I'm waiting for the options room to open up. So just to let you know that. But so far, got to show you this. This is just from experience that when you close on the absolute low, then you're going to test it at least once. I don't care what anybody says, you're going to test it at least once. So just keep that in mind. And that's what I try to do. So the other thing, what in there made the markets go down? What was your tell? So that's one of the things. What is your tell? So let me get on the option side and I'll let you know. So just give me a second. So sorry if my head's cut off here. Sorry. There you go. Just to let you know, is I'm always at the edge of my seat because I'm trading all day. So it's always exciting for me to trade. I've been like this forever. So just keep that in mind in here. So let me go see what's happening. Give me a second. All right, I'm duplicating this. I'm triple broadcasting. So I'm in the YouTube stream as a courtesy. I let Chart Patterns Mastery have access to this and the options room. So what are we doing today? Well, just from experience, the key is if you close on the low, you're going to test the low at least once when you have that nasty, sell off yesterday. Number two, what was making the markets go up this morning? So that's the next thing. So if my theory is you're going to test the low, you better have some reasons for that. So let me just show you in here what we're watching. Oh, give me 1 second. I'm quadruple broadcasting. Holy cow, Lango put this in here. Just keep in mind that means that I can go and humiliate myself quadruple times. I can't wait. So give me a second in here. Sorry about that. Mirza. There, welcome Essentials room. I hope you can hear me okay. So I'm in 4 rooms right now. Really excited about that. So, I mean, just because we did fine earlier, but let me go over what we were looking at. Number one, when the markets close on their low for the day on almost a panic, you're going to test the low at least once. That's just from all my experience knowing that. Number two, what's going to make it do that? Well, the first thing that was our tell today, even though markets were rallying, the regional banks were getting whacked. Look at that. This is a big move for the regional banks. This is before Powell talked. This was getting trashed. Markets rallied. It was still down for the day, and then it got even more whacked. What's happening now? Well, number one, the market's hypersensitive to this and the bond market. So you got to know your tells. So the tells that I look at are what made the markets go down for the last month is the bond market. What made markets go down about 3 months ago? The regional banks. So let me just go over, if you didn't know, on how this works how it works is the regional banks, even Schwab, what happens is that they have they have a ton of, let's say, 2-year notes. So theoretically, in 2 years, they're going to go to par. But the problem is because they bought them at, let's say, 1%, and now they're 6% or, well, 5% on their books. If they mark to market, which means the prices today, they'd be down a boatload. Well, the problem with that is it's fine. Go to maturity, who cares? Except if people start pulling their money out. And if they pull their money out, you're going to see this kind of reaction. That's what everybody's scared about. That's what everybody's scared about, because all of a sudden they're going to have to do they're going to have to sell at a loss, a big loss, big loss. They have huge losses. So that's why I watch the KRE so importantly. The other thing is the bond market. Watch how sensitive it was today. So I hope I'm going everywhere here. Let's see. Yeah, great. I'm everywhere. I'm trying to get yeah, it's not working the camera except on Chart Patterns Mastery, so sorry about that. But this is the way I look at it, is what made the markets go down today? What was going to make them test yesterday? What was going to make them test yesterday? Well, if the bond market reversed, look how sensitive the ES is to the bonds. The bonds rallied, the ES rallied. So the bonds sold off, like I said. So the bonds rallying, all of a sudden, maybe that takes some heat off the regional banks for like 5 minutes. And the regional banks rallied. So the things that made this get nailed earlier aren't there anymore. Well, they're there a little. Now, that being said, let me show you some levels. Number one, we're basically flat, except in the options room and the Chart Patterns Mastery. Guess what we're long? GNRC. We're still long that sucker of this butterfly for September 15th. So we still have on the 110, 120 at 265. So we still have on this 110, 120. There, it's $3. Now, why wouldn't I get out when the whole market's crashing? Because of this. I'm really obsessed about spaghetti models. It's a site that shows all the movement of hurricanes and stuff. All of these are going like that. They're going out to sea, except that one. So that's going to be something this weekend. And that's why I'm still in GNRC. I wouldn't be surprised to see it rally on the close, which means I'm going to be watching those 115 calls real closely for today. So just keep that in mind in there. That's what I'm going to be doing. So just keep that in mind. The other thing, just from a relative strength point of view, if you see the markets going down and getting crushed, like the NASDAQ down 100, and you see a stock that had earnings like Workday refuse to go lower, then it's probably going to rally more. It's just not going to fill the gap. It just refused to go lower. It's one of those things that if you were short, you're begging on the NASDAQ to be down 500. So maybe then it fills the gap. There are better things to trade, just to let you know. So one of the things to trade is the transports. Why the transports? This is real simplistic, but I'm pretty simplistic. So I'll show you. Because of this, it's really weird, but I swear there's algorithms out there looking at all this. So what am I talking about? The NASDAQ going to the 50. So you got the NASDAQ going to the 50. You got the ES going to the 50. All I'm doing is taking the 50. That's what so many people watch. I'm going to clear the drawings. There. So you got the ES going to the 50 and reversing yesterday. That's why I was bearish yesterday. So you got the NASDAQ going to the 50, and then you have the transports at the 50. That's why we've been fading the transports. Now, the problem is, you might say, well, why didn't you show us to short the IYT? It was impossible to borrow the little suckers. You couldn't borrow it. I tried to short at 246.5, says impossible to borrow. The puts are in the sky. I couldn't do the puts either. So all we did in there was we messed around with Federal Express. So I couldn't think of other ones. Why would I pick on Federal Express? Another simplistic thing. Because go and look at some of these. Let's take URI. Yeah, right at the 50. Yeah, so we were playing that to the 50. CAR at the 50. Federal Express over the 50. Now, I know that seems simplistic, but that's what I think some algorithms, the algorithms that everybody thinks have 50 variables, go ask our chart patterns mastery, the person that's been on a trade desk for 20 or 30 years, big trade desk in New York. Some of these algorithms are embarrassingly simple. So they're like, well, if the RSI turns up, they're going to buy. So here, what do? They find every transport stock that hasn't hit the 50. That's it. They haven't hit the 50. So just keep that in mind in there. So that's why they went for FedEx. If you go to the transports, you're going to see it's fascinating. Well, I think everything with the market's fascinating. That's why my nickname on the floor was Tinkerbell, because I was always so excited about the markets, which I still am. That's why I'm on the edge of my seat in there. So what am I watching in here? I'm watching this. Way under the 50. That's all I'm doing. Way under the 50. This is the most simplistic way I trade, and it works. This way, if the markets rally, guess what? These could still go down. UMP, not at the 50 yet. UPS plowed through it. KEX went to it. Under it. Not yet. Yeah, that one I'm interested in on the short side. Like I said, extremely simplistic. Now, just to let you know, on the Chart Patterns Mastery, every Sunday night, Tuesday night, and Thursday night, I post box charts, which means you go to the dashboard on Chart Patterns Mastery, you go to box, and I post. I've been posting. I thought I was going to post 8 charts. I've been posting like 20. So, and they've been working. So I'll keep doing them until everybody says I don't want to see them anymore. So, but they've been working fine. So just keep that in mind. So what else are we going to do in here? We're going to watch the bond market. Now, I'm telling you, long term, I'm still really bearish on this. So really bearish. And the reason I'm bearish, I know I've harped on this, and everybody was sick of it. But almost every single time that these start selling off, they go to the 50 moving average on a weekly. So going back all the way here, holy cow! Look at all those sell-offs and how they went to the 50. Not this one. You know, there was some QE stuff going on, but almost every sell-off went to the 50. This one, that's the COVID where the Fed was just juicing the market. But almost every one goes to the 50. So that's where I think it ultimately goes. Now, why would I say that? Because look at this. Keep in mind, it plowed through the 50 right here in early 2022. I mean, come on. I don't know how you could think that the markets are going to go up when I can get 5% in a 2-year note. So, and I can get 1.69 or something in the S&P yield. So that doesn't mean you can't have a rally. There's a lot of positioning, not as short, not as long as they were. And that's one reason I think you're getting a bounce. A lot of hedge funds are now like their exposure to the market is very low. When 3 weeks ago, right here, it was really high. So that's why I'm just trying to play quick twerks. So when you see the bond sell off, we're plowing and shorting the NASDAQ. So, and I'll show you something really cool. When I say plowing, we're also including bear flags. The other thing we're doing is when this went up here, so it had that one thing when Powell talked, I look for stocks that refuse to go higher, like Federal Express. So now I'll tell you something that you can make a mistake. Let's say I have all the reasons to short Federal Express. The problem is if you do a butterfly for next week, you don't do a vertical, you do a 5-point wide, you can be too right and you get yourself panicked out. So just keep that in mind. You can get panicked out easily. So, but still you're too right. How else would you have played it? You could do this. You can't do this. So you can do that, but you might be too right. Yesterday, that was like 90 cents. So you might say, well, why don't you do this instead? Like a broken wing. And let me show you how to evaluate a broken wing. Now, just to let you know, over my 8 years with Simpler in my own site, I can't tell you how many times we've been too right. So we've done a lot more broken wing. So the most you can make, just take that. So that's 5 points. Then take the most you can lose, 2.5 points. So the most you can make if the stock goes to 0 is 2.5 points. The most this can go to is 2.5. $1.83, I don't think so. So that's why you don't do it. I like this, like if this is 2.5 is the most you can make, this has to be like under $1. That's like the way I look at it. So just to let you know, that's how I look at it. Now, when it comes to the broad market, let's go into it. What do we do today? I think the first thing you do today is you try to find when the market's rallying what refuses to go up. So you'll see Federal Express isn't going up at all. So I want to short rallies in here because it's telling you it doesn't want to go up and it broke that bear flag. So I definitely want to play FedEx to the downside, but I don't know when this is going to stop. That's a good fake out right here. So let's go to a shorter term chart. And where could the markets go? Well, 15 is going to get a little overbought where everybody got hooked. So up here, well, it depends on the bonds. So let's say that it goes right here, 44.05, right in here. And then I watch this bond market go from up to all of a sudden it goes down 10. Darn right, I'm going to pile into something like Federal Express. So just keep that in mind. That's what I'm going to do. I just haven't, right now, I haven't done it. Now, getting back to GNRC. Where do we get out? Do you think the market's going to really crack and this head and shoulders is going to work? And it goes and fills the gap here. Now, that's where I think it goes ultimately, just to let you know. That's where I think it goes ultimately. So what do? Well, if I can get out of this at like 320, there it goes. Like I said, there's no way that's going down today. I don't know why it went to 113.51, but that's why we have a call fly on. That's in the options room and the chart patterns mastery. There. 320 is where I want to sell it. Take my 55 cents, $55 on a $265 investment. Take my 20%, a painless trade. We've never been down money on it. Just keep that in mind. So I'll post in the options room and the chart patterns mastery if I get out. Just to let you know, I'll be happy to put it in there. Now, if it's down, yeah, I'll still put it in there. But that's what I want to do. Now, when it comes to everything else, ultra short term, what's the market look like? You see what it looks like on a daily. Teetering on the brink of disaster. And This is what I mean about working off an oversold bad. So this is back to where it was here, but the MACD is over 0. That's bad. So what am I going to do? Right now, I'm looking at QQQ under the market. I know Danielle was looking at that. We agreed. So I'm not doing today. I do on Monday. So you see the NASDAQ refuses to go higher. The big problem is if you're too right. If you're too right, this is going to go all the way to 340. But you saw it went to 365. Probably the best play is to do something like this. Now, the problem is you don't want to go too tight, but you don't want to be too conservative. Yeah, that's 267. That's my Jimi Hendrix ringtone. Sorry about that. All right. So what are you doing here? Well, the problem is this is 7-point wide. The big problem is if it goes to 366, how much are you going to lose? Because these stocks are moving so much, I would rather play the stocks that refuse to rally when the NASDAQ just rallied 100 points. Because I still don't think, well, I'm not doing anything at the moment. Just nothing yet. I don't see the reason other than GNRC. I told you where I'd like to get out. So how am I going to get out of GNRC? I'm going to move it a point in your favor. Where would that put this? So we'll do the 109, 119, 129. Yeah, 320. But let's take out a week. Yeah, 375. Now you see why I'm interested between 320 and 340. You're just not going to make that much more. And if the market really cracks, yeah, you're not going to be thrilled. So that's why I'm putting it in there. Like I said, markets long term, I am bearish. 15-minute, overbought now. Now it's overbought. So just keep that in mind. That's why I'm looking to short rallies. Short rallies. That's what I'm looking to do. And I'll show you a couple of things. I'm not touching workday. I'm looking at Apple. The problem is that the puts for today are too high, the 177.5. I'm not paying 34. The 34 cents in the money trading at 76 cents. Forget about it. If I'm going to play Apple, I'm probably going to short stock with a tight stop. Try to say that quickly 3 times, but I'm probably going to do this. I would short stock with a tight stop. Why aren't I doing it? Because that's all of 30, 40 cents. It's just not worth it. Just not worth it. I'd rather mess around with this. Not a NASDAQ, but boy, does that look bad. So no matter what the ES does, I'm going to try to short it at the top of the channel. You know, that's what I want to do. So I haven't done it yet. That's what I want to do. We did it earlier. So just keep that in mind. That's what I'm doing. So, and keep in mind, I can't answer questions on the chart patterns mastery, but everything we've done in FedEx is a bearish trade. Just keep that in mind. Bearish trade. So that's how I'm looking at Federal Express. So now, what do I do with the rest of the markets? Well, now that the NASDAQ is selling off and the ES has this little head and shoulders, I'm looking to short something. So which one do I short? What refuses to go up? I don't want to do Toll Brothers because that's all of 65 cents. So Microsoft. How about that one? Yeah, it's just not enough of that's all of 36 cents. If I'm going to do something, like I said, I want to short rallies. And also, when you watch the bonds downtick, look what the NASDAQ's doing. Yeah, the same thing. And I'll tell you what's going to be the biggest tell is if the bonds are up 9, let's say in the next hour, and the NASDAQ's still down 34, then I think you're going to have the NASDAQ really get hit. Really get hit. Like, see it down here, another 200 points. So, but for now, you just got to see, lunchtime's a pain. So just keep that in mind in there. And like I said, the higher the interest rates go, the worse for KRE. On the other hand, it has held. So this bounced, but I'm not. Now you got the bonds going down. I want to look for a short under the market. And all I'm doing in here is just taking basic connect the dots. There is your top. There is your bear flag, sort of, where you can connect like these lines. This is the lack of support all the way to 43.80. Right there. That's your support. How about the NASDAQ? Well, there's your break. Like I pointed out when it was happening, there's your support. I'm really bearish in here. The problem is, what do you short now? I mean, like right now. I don't think it's the Dow. I think it's the NASDAQ. So I hope you saw me on Trader TV when I was really bearish on NVIDIA, even though it was up 30. They front loaded all their earnings. So, and the stock was on its high for the year. They already factored it in. What do I want to do now? I still think we should think about that on the short side. It won't go up. The problem is I hate buying these puts because this has to go to 254.5 just to break even. Now, don't get me wrong. I'd love to see the market futz around here for 3 hours, have this stay right here, and have these down to 20 cents or 10 cents. Then it's a good risk reward. Now I'm not sure, but that's what I want to do. Like I said, this is the problem with Microsoft. Is it really worth screwing around at 319.93 where you're going to make 23 cents? You're not going to make a living doing that. You got to find the bigger moves. So we could get them later, no doubt about it. But the problem is when this broke, this projection was tiny. I mean, maybe you chop off the QQQ a little, but like you see, yeah, maybe you could have made 40 cents when it broke. That's not that easy. You got to give me 1 minute. All right, I'm back. I'm back. So, just keep that in mind. We have an air conditioning problem. So sorry about that. So in there, but getting back to it, what am I going to do right now? You can tell the ES doesn't want to go down anymore. Sure, that could hook a lot of people. No doubt about it, especially because it looked like it broke and it came back. I'm not touching the ES. I will tell you, I still think this is a good idea if the market doesn't die. Right there. And when I say I'm bearish, by the way, that means eventually. It doesn't mean today. So I still want to find things that refuse to go up. But I think this is showing you it doesn't want to go down. It's very sensitive to the bond market. So I'm bearish later. In fact, I'll show you a trade I'm thinking of doing. I haven't done yet. But first things first, how about today? Well, this is stuck at right at the strike price. There isn't that much there. I'm real interested in these 115 calls. If this settles down to like 114.60 in the next hour, these are probably going to be about 25 cents. And then I'm going to play them. So I got to be out by the end of the day, but that's what I'm looking to do. So just to let you know, that's what I'm looking to do. I haven't done them yet, but that's what I'm looking to do. So nothing yet. So I'll tell you right now, though, the market's rallying, and check out what Federal Express is doing. A bear flag is a bear flag. So everybody asks me what a bear flag is. There's your bear flag. And this was on our box charts yesterday. So that's why, you lean short on the opening. So just to let you know. And that's what we were doing. All right, what else do we do? I think everything is ultra sensitive to those bonds. So I've already missed most of Federal Express. Let's find another one. I'm just going through all the stocks I'm watching. Oh, and that's another thing. I won't be on when this happens, but a lot of these companies, Apple, Google, Meta, Microsoft, especially Nvidia, they have huge buybacks. Nvidia just added 29 billion to their buybacks. So what do? The last 10 minutes, they can't buy back stock. So people try to anticipate that. Look what happened to Nvidia the last hour yesterday. There you go. The last hour, it held up, and then everybody's like, I don't think so. So it actually right here at 1550, it went from 475 to 472 in 3 minutes. So this is what you want to watch if I'm not on. So the SPX, and I screwed it up. Don't think I'm perfect about this because I missed it. So I tried to buy the 43.85 puts with about 3 minutes to go. So I didn't get them. It didn't go over 43.85. So that's with 3 minutes to go. The 43.80 puts were 20 cents. They closed at $4 because of that lack of buybacks. I'm just telling you, if you could get some real cheap puts, not $1, but you go in and try to if this is at a strike price like here, 43.82, ironically, it's right there. Not now. This is for later. So if it's like 43.82 with, let's say, 3 minutes to go, you try to buy the 43.80 puts, not with 15 minutes to go because you don't know what strike it's going to be near. So that's a little trader trick I'm going to do later. So just keep that in mind. And in the meantime, Federal Express is getting whacked. So very interesting. Now, like I said, I have a number of things I use as tells. So one of them is KRE. One of them is definitely the bond market. So you're seeing that when the ES went down, these sort of held. Not a lot. If they have another leg down, then I'm thinking this has another leg down. But for now, it's lunchtime. Not a lot's going to happen. So that's the way it looks to me. Those are real tempting for 13 cents. So they're out of the money. When would I buy them? If you see these bonds go from -3 to -16, I'm going to try to buy these out of the money puts. So all these things are ideas, but I'm not doing them yet. So just let you know, just not doing it yet. So still haven't done much. Like I said, the Apples, the Googles, the risk reward wasn't there. Now, I will tell you something interesting. You got Microsoft like holding like a champ right here, or a chump, however you want to look at it. And if it's right here with like 10 minutes to go, I'm going to try to buy the 320 puts. They'll be like 10 cents. I've just seen some wild stuff on those. But right now, it's just sort of your nothing happening kind of day. I mean, now I'm worn out from earlier, but for now. I haven't done anything in here. Why not? Because the bond's downticked and that upticked. So I'm not doing anything in here. I don't see the reason to do anything till I get a better tell. But I am looking at these. Right there. So I'm looking at, like I said, Federal Express a little late because it went to the next level of support. But boy, I want to look at those 52.55 puts by the end of the day. So what else am I watching? Watching Toll Brothers. That they're all holding for now. That's what I mean is this could be a real disaster, but probably not right now. Not right now because nothing's going down. So, and I don't like these long-legged things right here, which has nothing to do with spaghetti models. Let me give you the link for spaghetti models. All this is, and it's been working, is you go to spaghettimodels.com. I have no affiliation with them. And all I'm doing in here is watching this stuff right there. And the more percentage of that going up, it's all perception. It doesn't mean GNRC is going to make a fortune, but it's held up great all week. So, and now look what's going on. That's what I'm watching. That right there. So that's what I'm watching. And that's why we're in a butterfly. Now, broad market, you got to look at things like Federal Express still. I'm going for the worst looking stocks, just to let you know. Always going to the worst looking stocks. And the reason I go for the worst looking stocks if I'm bearish is so if I'm wrong, like on the markets, then it could still go down. So heck yeah, I want to see this rally. I want to see this rally to here, right back to that 4403. And then we'll see how the dogs are acting. But right now, with that kind of reversal candle, I just can't do anything at the moment. And I'm not going to do anything. Doesn't mean I have to short. I'm not going to short right here. Doesn't mean I have to buy. And here we go. Why is the markets going up? These suckers, the regional banks, are going straight back up. Sort of. So I got my work cut out for the last 3.5 hours of posting things. But I think the biggest thing to watch is going to be that and that. So if they break down, that's a big if. So it was posted in the alerts just to let you know, 2 weeks ago. So we're just going to September 15th because the whole market could get crushed. But, 265 isn't bad, but this is what we're in. But we're going to get out soon. Don't get me wrong. We're going to get out soon because I don't like the broad market. This is what we did. But we did it at 265. And I'm telling you, if this goes to 116 today, this will probably go to 330 and I'm out. And I'll post if I'm out. Now, you might be like, why would you get out? I've just seen with the broad market, if it crashes, you got to get out. You just got to get out. So, I mean, I can always get back in. Now, for today, I'm real interested in those 115s, just not right here. I'm not paying 50 cents. So just keep that in mind. I have no idea if there's going to be a pin rally. The third Friday of the month, maybe. But right now, no idea because there's a lot of damage. Now, if the bonds are up 20, yeah, I'd agree. But I don't have enough information right now to just say, yeah, it's going to pin. It's acting fine. Don't get me wrong. It's acting pretty well. But I don't have enough information to say it's going to do that. So, but I will give you some ideas for you, Tom H. I don't know about that, getting back to 4,400. That's a fur piece. This is what I like to play, a tenth of the index. A tenth of the index. If you want to play up to 440, you go do like a 2-point wide. I'm not doing it. I'm overall bearish. This is like a 20-point wide on the SPX. I'm not paying 57 cents. I thought maybe it was 30 cents. So, but that's better than paying $500 betting on that. So now let me just tell you the thing yesterday I talked about when the SPX was here. So it was yesterday, it was 43.75. Something like 40, it was 43.80 with like 1 minute, 3 minutes to go, the XSP puts were 2 cents. Yeah, they were 2 cents. So it's a great risk reward. Just keep in mind the commissions are higher, but I'm telling you, we messed around with it earlier. If you would have done SPX, you would have gotten stopped out because it's a ton of money. So, but that for any indication, maybe. I mean, I see what you're talking about, but I'm just watching. There's a lot of groups not acting well, especially the transports. And I see what you're talking about, but I think the key is going to be the KRE, like I have in the bottom, and the bonds. So if the bonds break this, I think the probability of going to 4,400 goes down dramatically. So, I mean, that's the way I look at it. Now, you might ask, well, why don't you do this one? You know, betting on it going to 400, doing a 10-point wide, or this one a 1-point wide. Same thing, either. It's probably about 16 cents. Let's see. Yeah, 15 cents. How do I know that? Well, I was a market maker on the floor a ton of years. That's like $1.50 on the other one. The problem is at noon, that's really tough because you don't know what strike it's going to be around yet. So I'm more likely to do this. But 50 cents is way too high. There, that I'm more interested in. That's like a 20-point wide for $3.80. I'm much more interested in that. So, and that's because I think a lot of things are damaged. And I think you see what's going on. I'm telling you, use more than one reason to do something. Look what these are doing. And I think you see the second they look like they're breaking, the ES goes down. Like I said, if I have more information, I would rather do a tighter fly when the direction is known. So, I mean, for now, this is trying to go down on the bottom right, and this is holding up like a champ. So, I'm just not doing anything. I understand thinking it's going higher, no doubt about it, because of that big old reversal you got intraday. There. That's really sloppy. So on the one hand, you could say it's a bull flag, that's some kind of bull flag, and it goes up to here. On the other hand, you could go and say on a 60-minute chart, it's just like this. Big old top. So it's a tough call in here. It's a tough call. So I think for my money, I'm going to go for what refuses to go up. Everybody is asking if we're going to go up. Isn't anybody going to ask if we're going down? So just in there. Now, keep in mind, like I said, it's posted not only in the bottom chat. Oh, here, let me put it up here. But this we did 2 weeks ago. Just keep that in mind. 2 weeks ago. So how do I get the profit loss potential? All about support and resistance. So Federal Express projection. So that projection. So that's how we come up with the profit and loss potential. It's all about the chart patterns and support and resistance. And this refused to go up. Well, I'm telling you, I try to share the market maker experience. And basically, it's like, what is everybody watching? And right now, they're watching this. And they're watching when it tried to break down, the ES wouldn't go down. So that's how we did it. So you had, let me see if I have a picture of it, just so you know what I'm talking about. Let me see if I can find it. There, this gives you a good facsimile. Let me see if I can find it. It's like this. All right, that's what it was like. 8 years of that. But the reason I'm showing this one is because of these screens. So every one of these screens, we're watching criteria. So we're watching criteria in there. So we're watching like 8 most important stocks. We're watching the advanced decline. We're watching the ticks. We're watching the bond market. So that was our criteria in there, was using those screens. And of course, customer orders we could pick off. Now, on the other hand, most of these people only knew how to trade against the customers. They didn't learn how to trade charts. So when it trended toward electronic trading, we had 800 traders, and my boss said I was the only one from the floor that was consistently making money because the other ones didn't know how to chart. So that thing about feel combined with customer orders was a really powerful thing. So that, if that helps. Now, I'll tell you another thing. Like I said, these down here tried to break down, but this refused to go lower. So darn right, I'm not shorting anything. So, and what was acting well? Here you go with relative strength and weakness. We know that the FedEx was acting weak relative to the market. So when the market had a little torque down, it went down. We knew GNRC has a tropical depression out there, and look what it did. What a beautiful thing. Where's our butterfly now? Let's see where our butterfly is. I'm telling you, between 320 and 340, I'm out at least a half. Yeah. Now, let me just tell you the way I look at it. This has been working. So what's been working? You got these hurricanes or possible hurricanes. Then they turn this way and GNRC goes back down. Then another one comes this way and GNRC comes back up. But I'm telling you right now, when you see this stock is not going to sell off today. It's a buy on dips because that could change over the weekend. Who wants to be shorted? So that's why I was bullish on GNRC, and I still am. So it was all the if then. If the stock was holding up when this was down 20, then if this rallied, this bull flag was more likely to work. So where could it go now? Well, probably to the highs. Probably to 117.5. So just to let you know, I hope somebody in the options room is looking at this, but trying to do the easy trade. So that's the easy trade, I think. So Apple, you're talking about 25 cents. I don't know if that's worth it. I'm telling you right now, If this is near 177 and a half with 10 minutes to go, I'm going to buy the 177 and a half puts. But for now, the markets are acting okay. Trying to go to your 4,400 like you mentioned. Yeah, SM77. I would show you the picture of me on the floor. The 1987 yearbook was me. I was in the middle of the IBM pit. Let me see if I can find it real quick. This is like pictures of Yellowstone when somebody does a slideshow and you fall asleep. But I'll look anyway. I won't be able to find it right now. I wish I could, but I can't find it right now. Yeah, if I could, I would. So actually, SM77, when I'm off of this, um, just I'll look for it. So I'll look for it and I'll let you know. So yeah, but it's a cool picture. It's when I had a full head of hair. And like I said, it is not a layup short in here whatsoever because this criteria is not pulling it down. And when it tried to go down, this went up. So darn right, I'm not playing from the short side right now until the market tells me I should. So at least that's how I'm doing it. Now, long term, yeah, I'm bearish. Short term, no, the market's telling you it doesn't want to go down. So that's, I think Sam's on to something. It's a good risk reward what he was doing. I think it was Sam, right? Yeah. Now, I know Henry does some other wild stuff with like the 1x3x2s betting on that. That's a cool one too if you could do it for very little risk. So both of you are done well on those. In fact, Sam, I really like that one you did around 44.50, that 1x3x2 broken wing. Didn't you do a 4,400, 44.40, 44.50, 44.55? I think you did that. And it was a good one. It was a great one. You were risking 20 cents. It was amazing. So nice job. Yeah, I mean, there's a lot of good stuff on here. Did the guys on the floor try to move? Not with IBM, but I'll show you something. That's a great question. The guys in the SPX pits all the time would try to buy a bunch of the futures, the index futures, figuring it would move the stocks. But if the stocks had like big institutional sellers, it wouldn't move it up. They'd have to scramble and pound them back out. So they did try to move it. So no doubt about it. They did try to move it. It's a great question. So everybody take care. Thanks for being with me. And I will talk to you later.